introducing today's event in partnership with our friends from Telstra. We're going to be focusing as best we can on several themes today, among them the shift in FX activity to Asia, the internationalization of the RMB, the big issue clearly, ASEAN currencies, how they might play out in 2017, and we'll also look at how tech and fintech is shaping and reshaping FX trading. Delighted to be joined by four distinguished speakers to lead today's discussion. Robert Miniken is Head of Asia FX Strategy at Standard Chartered Bank. Sherry Madeira, Special Advisor for Asia, City of London. Mark Williams, Chief Asia Economist at Capital Economics. And Andy Mather, Digital Transformation Director at Telstra. I'm going to invite each of our experts to make some opening remarks, and then we invite you to participate. As you know, for those of you who are familiar with Asia House, we welcome your questions, we welcome your comments, we welcome your observations. Just let you know, today's event is on the record. Unlike some of our private briefings, it is on the record. Feel free to report and attribute. So let's get underway now, and I'd like to start with you, Robert. The overwhelming issue, dominant issue is internationalization of the RMB. What's the roadmap?
Thank you very much, Michael, for the introduction. The first thing I'd like to stress is that although we've seen quite a lot of volatility in global financial markets, and in particular China FX, over the past couple of years amidst the China FX reform, the political commitment to the internationalization really remains very much intact. And I think often, we forget some of the long-term drivers for that, the role of China in the global economy, but also China's own economic and financial market transition. Ultimately, we expect to see China having many of the similar financial market structures, capital markets, FX market, that we see in the major developed economies. Now, it is clear that we've had a period of turbulence, and that really has shifted the emphasis of the authorities in terms of managing the internationalization process. And of course, we've had 2 years of quite heavy capital outflows from China, which finally, just in recent months, have started to stall, and the capital account has stabilized. I think it's quite important to note that some of the stabilization in the capital account reflects exceptional measures by the Chinese authorities to try and stall cross-border transfers, either by corporates or indeed by investors out of China into overseas markets. And that by itself seems to be something of a short-term setback from RMB internationalization. But I think it's important to note that the big emphasis now is on attracting capital inflows into China. So internationalization remains very much on track, but the nature of the path has changed. So we've had a lot of reform around overseas investor access to the onshore bond market. We've got the opening up of the onshore bond market via Hong Kong with the Bond Connect. That's just a new initiative just here. And it seems likely to be followed by new steps to improve the accessibility of onshore financial markets, which will ultimately lead to index inclusion and new capital inflows. I think for me, one of the big challenges in thinking about RMB internationalization is simply that I think we have to be very sensitive to the extent to which we're seeing reform of China's onshore financial institutions and regulatory regime. When I was in Hong Kong and wrote my book on RMB internationalization, I treated it very much as an engineering sort of project, so sort of building pipelines out of China into China to allow for the free flow of capital. But more recently, I'm putting a little bit more emphasis on the overall institutional framework for RMB internationalization. And in some ways, we've sort of stumbled into an FX regime in China, which has some very unusual characteristics. We don't know when the next PBOC policy meeting will be, who will be at the meeting, what will be on the agenda. The only thing we know is where PBOC thinks dollar CNY should be trading, and it announces the midpoint of the trading range each morning. Now, if Yellen were to come out, the Federal Reserve Governor, to come out each morning and get an expressive view on the dollar, never mind specifically where dollar CNY should be trading, I think that would be greeted with some alarm. So this type of mix of broader institutional low transparency, but very specific guidance from the central bank on FX, I think is a bad mix. And we need a correction basically on both sides. So I think a lot of the financial reforms and regulatory reform we're getting in China, I think, are welcome. The recent steps have created fears of a clampdown or a big deleveraging, but I think the regulatory reforms in China are very welcome just here. But I think we need more institutional transparency as well, and that ultimately will create the foundations for more balanced flows across China's capital account, both inward and outward. So I think in terms of the broader outlook, we're very much optimistic about that dynamic, but think the institutional framework is important as the hard engineering for RMB internationalisation.
Rob, thanks very much. Mark, let's stick with the RMB. What do you suspect or expect a similar path? And equally, what's the impact on ASEAN currencies, the wider ASEAN market?
Well, that's a good question. So, for those of you who don't know capital economics, we're a global macroeconomic consultancy. We have a lot of clients with interests in Asia, and this is a topic that kind of has come back again and again over the past 10 years. Will there be a renminbi block? Over the past 50 years, it's always been a dollar block. These currencies have been managed against the US currency. I have to say that there's no sign yet of this renminbi block appearing. I mean, things could change as the renminbi becomes more widely used outside of China, but I'm not sure why that should necessarily be the case. If you look around the world, the UK's major trading partner is the Eurozone, but sterling doesn't track the euro that closely. Back when the Japanese economy was the biggest in Asia, their currency didn't really track the yen. So it's not that straightforward. There are historical reasons why these currencies follow more the dollar than the renminbi. They might be a little bit arbitrary, but that certainty is actually quite a good thing from the point of view of investors. We know exactly what is going on. And certainly if you talk to policymakers in Asia, Korea, for example, worries much more about what's going on with the yen than what's going on with the renminbi. So I don't think we're going to move to a situation in which these currencies are following the renminbi over the long term. You do sometimes get short-term correlations when they are hit by common shocks. As Robert was saying, over the past couple of years, a lot of those shocks have emanated from China due to the opening up of the capital account, the capital outflows, and so on. I think one trend worth thinking about there is, if you talk to participants in financial markets, there is unanimity now. Everybody believes the renminbi will continue to weaken at least over the next 2 or 3 years. I think the last poll I saw had 21 out of 23 analysts saying the renminbi will be weaker against the dollar. And I think that's whenever you see a consensus that is that strong, I think it's worth questioning. It seems a bit odd. You've got still a relatively fast-growing economy, current account surplus. You would normally expect that currency to be strengthening. It hasn't been simply because of these capital outflows that we've had over the past 2 or 3 years. But if those capital outflows were to stall, then the outlook for the renminbi would look very different. And I think there's good reasons to think actually that could happen quite soon. Capital outflows have been driven very much by sentiment towards the renminbi. It's kind of circular. If people start to believe that it will strengthen, then those flows stop, and it will. And the fact, as Robert said, that capital flows have successfully been clamped down recently, I think suggests that a turning point of some sort might be near. So in terms of the near-term outlook, I think one good thing for ASEAN currencies anyway is that some of those shocks that we've had from the Chinese financial system should ease.
Okay, so you take a contrarian view on that.
It's a view that virtually nobody agrees with. It's
We'll explore that a bit later. Let me turn to you now. the response of the city. I believe FX volumes fell in London last year for the first time in a decade. Clearly, there's a shift in volumes at the very least into Asia. What's the city's response, and what should be the city's response?
Thank you very much, Michael. And let me preface this by saying I'm not an economist, so we've had two economist views, but perhaps we can look at this from a bit more of a trade perspective. You're right. We are keeping a very close eye on foreign exchange from multiple currencies. It is still the case that London is the world's largest foreign exchange center, so obviously that's something that we're paying particular attention to, as we all should be contributing to make sure that those volumes are doing what they should in terms of efficiencies and effectiveness, so that the pool here continues to be active. But from our point of view, let's have a look at that RMB. It's something that here in London, we put a lot of effort in, both politically but also commercially, in terms of becoming the world's second largest offshore RMB hub, second only to Hong Kong. And it's a point worth making that that's maintained since Brexit last year, since that referendum. Let's think about that and think about how that happened. So in 2012, the City of London itself was a very big player in creating some of the infrastructure and knowledge and education that started building the RMB initiative here in London. And really, we did a lot of learning. So how does this happen? Starts with a trade currency, moves to an investment currency, and ultimately a reserve currency. Of course, we all saw how this was accelerated by Chinese political will to get an inclusion in the SDR basket, which we have seen as being achieved. So now where do we go? So there was a big push there that said we want that carrot, and now we have it. But taking Robert and Mark's point about the future valuation prospects of RMB, we're in a very different situation now, where 2012 to 2015. Hey, it was a great time for City of London to be talking about the RMB. All you had to do was hold it, and you were appreciating. That sentiment has radically inverted between 2015. Although we are seeing some stability now, and we can discuss why that stability is happening and who is shoring it up, but perhaps that's a debate too far. But at this point, I think there's an opportunity to talk about RMB internationalization again here in London, and the phrase is wrong, so perhaps I can throw that out to the table to think about a new way of talking about it, because people get a bit bored with that phrase. Frankly, we're talking about a much more mature interactive currency now than we were back in 2012. In my own personal experience of being back and forth from China most recently in the last few months, I lived in Beijing for 3 years prior to that. PBOC, I concur with Robert that they are looking at a direction of travel which has continued opening up. And in fact, the discussions can now actually touch on things like derivative products and hedging. Whereas back a few years ago, that was a topic that was seen as too hot to handle. So I think that that's actually quite mature in terms of thinking. However, I think we need to think about it from both sides. An opening up right now of the capital account is not something that China wants. Let's think about derivative products that are going to be able to create a real market for having those bulls and those bears meet and create a stability in the currency. One of the things I'd like to bring up, though, is about that trade, investment, and reserve currency piece. Peter Budd, further down the table here, and I had the pleasure, luxury, and crazy weekend of the Belt and Road Forum last weekend. So this was President Xi's gathering of 29 world leaders to talk about essentially reopening the ancient Silk Road into a modern Silk Road. Well, let's translate that into what it means for the RMB. Essentially, this becomes an interesting vehicle for RMB internationalization. And where the MDBs at the moment are very much in US dollar denominated currencies. However, the discussion was very much pushing towards how do we deal with local currencies? How is it that we work in RMB? And let's pick up on some of the things that President Xi said, which is that financing is the lifeblood of a modern economy. He also, immediately after that, made announcements that the Silk Road Fund, the China Development Bank, yeah, I got that right, CDB, and Exim Bank were all getting massive amounts of influx of RMB, 100 billion, 250 billion, and 130 billion respectively. That's in RMB denominated funds to be pushed out through the Belt and Road. So I think when we refer back to thinking, trade, investment, reserve. We're seeing a different cycle that's going on there. It's not one to ignore.
Thank you very much. Lots to talk about there. Andy, let me come to you on the technology front. Massive changes in fintech, reshaping of the markets, demographic changes. From Telstra's perspective, what's happening in Asia FX apart from the increase in volumes?
Yeah, so thank you. I'd like to start by saying who Telstra is. So we, for those who have lived and worked in Australia, you know us as a provider of telephony, mobile and rich media content. For those who don't, we're the world's 8th largest telco, often in this region, a very well-kept secret. People often mistake us with a very well-known car and battery manufacturer. So I need to start off by saying kind of what our pedigree is. Around about 18 months ago, we bought a company called PacNet. And one of the reasons we did this is while we were very dominant in the Asian market with a lot of subsea cables and a lot of data centers, one of the things that people were finding very hard is to gain access into China. So even as a global telco, our ability to deliver services in and out of China was very constrained. And the acquisition of PacNet gave us access to JVs in China, data centers in China, and the ability to deliver services in and out of China. We've also embarked on a digital journey ourselves, transforming our business, and that's enabled us to have the building blocks to transform other companies as well. Often that relies on us investing in very small, innovative companies that are there to change the market, change the normal step change and leapfrog, really, technology on a pace. And often we see that leapfrog on technology in emerging markets, and certainly that is very dominant in Asia. I think one of the things to note, though, I still, being based here in London, speak with a lot of European banks. A lot of the conversations I have when we're not talking about Brexit or MiFID as an impending regulatory change here is to help them gain access to the Asian markets where we're a dominant player. One of the things, though, that it needs to be said, when you're moving a foreign exchange platform, it costs an awful lot of money. That decision isn't taken lightly. So hence the pools of liquidity in London, New York and Tokyo. We still move people from here to Tokyo. We still refresh technology. When you refresh technology, it gives you a huge opportunity to change and invest in a different location. But what you need, because it's not exchange traded, is access to liquidity, access to other members. So it's a huge first mover disadvantage to go and establish yourself in I'm going to say remote geography, but in a new centre. Say, if you wanted to go into Malaysia, for example, and establish a foreign exchange platform there, you need access to liquidity in very close proximity for you to remain competitive. So that first mover disadvantage isn't also helped, I think, by the emergence of more fintechs. The challenge that we have on the foreign exchange side with fintechs is a lot of the fintechs have been invested in due to the change, the demographic change between the baby boomers and the millennials. And the millennials are a hugely media savvy generation, very well educated and very ethnically diverse. But they're also very digital. And what they're demanding of customers isn't traditional banking. It is actually a new type of agility or speed of access, and also customer experience. Now, what we've seen is a lot of the fintech investment has been to capture that business, to capture that flow, so banks can adopt and capture new customers, those people who haven't had banking, who probably don't even know what a branch is, and associate it with a tree rather than a thing on the high street. And so what we're seeing is a lot of money going into that area in terms of the retail side rather than the foreign exchange side in the fintech side. But what we're also seeing is a lot of the CIOs have a very different attitude towards fintechs. There was a Gartner report the other day that around about 50% of CIOs embrace fintechs. 10% buy them, 10% create their own, but 25% of CIOs ignore fintechs. So I think it's a huge opportunity that we're seeing in the market for growth in different areas, but also for new entrants. And I think when you put all these things together, I think that the idea of wanting to invest and wanting to put things into China is great. The challenge is actually, how do I get my money out again? And if I take that risk, what happens if it goes wrong? So I think it's an interesting time we're seeing.
Great, thanks very much. Right, very keen to bring you all in now. If you'd like to make a comment, ask a question, just let me know. There's a couple of mics around the table if you feel you need them. I would like to go back to the Belt and Road because the Beijing summit obviously huge, lots of deals signed, billions and billions. Great vision of China, lots of talk about it in London, London's involvement. Will that accelerate, Robert, the internationalization or maturing, or however we want to put it, of the RMB? Is this an accelerator?
Of course, I mean, it essentially is extending China's reach within the region and globally. And we expect the development of the initiative to be accompanied by expansion of debt financing, both in other currencies but also in the RMB. So I think it's definitely an important positive dynamic for RMB internationalization. But just to come back to these, the underlying issue, which is from my perspective, which is I think that we ultimately need willing investors in the Chinese currency and borrowers in the Chinese currency. So ultimately, we need to go back and assess whether it can play the same role in global financial markets as, for example, the other currencies which are involved in the SDR basket. So the inclusion of the CNY in the SDR basket was, I think, obviously a big policy success for China. But did it really give the Chinese currency the same characteristics as the US dollar, or the sterling, or the Swiss franc? Of course, the short answer is no. The backdrop is completely different. If anything, it accentuated the differences between the currency, between CNY and the G10 currencies. So I think we need to be careful. I think there's actually a lot of underlying demand from investors, from borrowers, a lot of trapped interest in the Chinese currency. But beyond it, we need to make there's really an ask for China and China's institutional framework, regulatory framework. Only then, when this is in place, will some of these bigger dynamics, One Belt, One Road, etc., initiatives fully feed through into wider use for the Chinese currency.
Sure, let me turn to you, because you raised this Belt and Road. Obviously, you're at the summit. Does it shift the RMB further along the path you said, trade, investment, and then reserve currency? Is it an accelerator?
I think that it's still a great narrative. And I think that the world's financial markets, London obviously playing a very proactive role in this, are necessary actually to put a little bit of reality for international financial requirements into the mix. So I was very heartened by the fact that the phrase we need to make sure that these projects are bankable and financially sustainable, as well as green finance. Ecologically sustainable came up as well. But from this discussion, I think that is a really key piece that is recognized by both China and the rest of the world. So yes, it's a point for discussion. It is obviously going to hopefully encourage more regulatory coherence. And I think that it's an opportunity for us to start defining from all of our different viewpoints, what does a Belt and Road financial instrument mean? And how is it that RMB plays a role? How is it that a US dollar plays a role? And how does local currencies play a role? On day 2, there was a banking roundtable as part of the Belt and Road Forum. And the participants there were very interesting. Bank of Laos, Bank of Cambodia. These were the players that were also around the table. So if we look at Southeast Asia, they're very interested in engaging and understanding how it is that their infrastructure projects can be bankable and can be financially sustainable. So I think it is a journey.
Thanks. Okay, let's open up a question. Who would like to begin? Peter, you're at the summit. You've been quoted by Jerry. Who's passed down a mic? So Peter Budd from Arab.
I should premise my remarks by saying that I'm a simple engineer, not an economist, but the scale of what we're talking about with Belt and Road is just beyond belief. In hard terms, you've got somewhere between 60 and 70% of the world's population down the presently defined corridors, and their take of GDP, global GDP, is 30 to 35%. If you can actually kick-start that whole mechanism, and some things will fail, there's no doubt about it, but overall I came away with an impression that this was really a stepping up, a change of gear in this whole initiative. Belt and Road is actually almost expanding like a web. Well, I don't know whether you picked it up, Sherry, but on Sunday in She Speaks, he introduced the Mongolian element to the proposition. Okay, another corridor. I'm told by Chinese think tank officials that there's going to be another one popping up in the next week or so, which is going to be through into the Antarctic. So the Belt and Road is not much about Silk routes. It's actually about where China sees opportunity and where they're going to go. And I can't help but think that behind them, they're taking the RMB. You know, a lot of these developments would happen in any case, but what China is doing is filling in the connectivity bits which are not bankable in our terms. And that is what is really going to add the value. My overriding concern is that if we don't change the delivery paradigm, i.e. the environmental issues around all of this, then the situation that we see ourselves in now in terms of environmental damage to the world will accelerate at a rate that is almost inconceivable. So we've actually got to link what's going on in infrastructure terms to the money, because that's the only way you can actually control the quality and the long-term objectives of what is going to happen. You know, if you look at a lot of these countries along the route, they're not really thinking about environmental damage. They're thinking about how we can improve the well-being of our population, increase our wealth. So I think the Belt and Road actually offers an opportunity to actually deliver this infrastructure in the context of a sustainable agenda. And that's where I think we in the UK have actually got a significant offering to make. And along the way, I think it's inevitable the RMB is going to be much more of an international currency, because China is frightened about instability in RMB. This is the way I see it. And they're very concerned about what Mr. Trump does with repatriating dollar reserves back to the US, the impact on their currency and other ASEAN currencies. So any sort of closed loop type of RMB deals with countries to deliver Belt and Road, I think is bound to increase the internationalisation of the proposition. So I don't know. Is that?
Let me turn to Mark, because again, you have a different view from most in terms of appreciation versus depreciation of the RMB. Is Belt and Road part of your calculation?
Well, so I'm more optimistic than most about the near term for the RMB, but actually when it comes to things like One Belt, One Road and internationalisation, I think I'm more of a sceptic. I mean, I think you've put your finger on something there, that the authorities in China are very worried about volatility in the RMB. We've obviously seen that over the past couple of years. And that actually argues against making it an international currency, because it can only become an international currency if you allow foreigners to get active in Chinese financial markets. Now, obviously there have been little bits of opening up recently, but there's also been sort of closing the shutters in other ways. There's long been this contradiction in Chinese policy making, that they've been talking about the renminbi becoming an international currency for a long time, but they remain extremely reluctant to give up control of their financial conditions to global markets, with good reason. If you studied the history of developing economies, things tend to go badly wrong when you first open up and allow foreigners in. So there's this sort of challenge there. It's unclear how that's going to be resolved, but if anything, I would have thought the past couple of years will have made policymakers more nervous. Now, of course, they still talk about making the renminbi an international currency, but the reality is that they've tasted some of the instability that will follow that.
Okay. Sure. And then you're ready. Sorry. Yeah.
Potential of an RMB block. Now, I could see that happening in the ASEAN region. just looking at the relationships that we saw evolving over the forum, particularly positive interactions with, Cambodia, Pakistan were obviously up for, expounding the virtues. Indonesia, heavily involved. Philippines, heavily involved. I'm just wondering whether we could see an RMB bloc appearing.
Well, I mean, just to sort of repeat my points earlier, countries manage their currencies for their own domestic purposes. Even somewhere like Hong Kong, which obviously has got incredibly close ties with the mainland Chinese economy, the economic arguments for them adopting the RMB or pegging to the RMB are not really that strong. Their business cycle doesn't move that closely with the Chinese business cycle. It's arguably as closely linked to the US business cycle. So I remain rather sceptical about this. There's also the case that that the renminbi, at least as it is at the moment, is where policymakers want it to be. It's not set by the market. So I think that would make policymakers in other countries a little bit nervous, shackling their economies to the whims of Beijing.
Rob, your view on that, and then I'll come to you, Ravi.
Well, I think you're right. I mean, it is natural, given the very close ties, trading ties and other ties between countries in the region and China, that the RMB will play a bigger role in their FX reserve holdings, for example. We've seen that across the region. That's natural. And in terms of the rebalancing of the global economy, I think it seems natural that the RMB will play a bigger role, reflecting China's role. In terms of this issue about volatility, though, I think you're quite right. I think there is a fear about market volatility, and I have to be frank, a fear about market pricing. And I think that's really going to be a bit of a problem in terms of not regional internationalization, where I think you're right, the prospects are very good, but broader global internationalization. So just as an example, typically when a deep capital market and debt market develops, it's typically priced against the sovereign bond market. So what we need in London, as in other centres, is quite significant CGB issuance by the Chinese authorities. Now, I know why they're sceptical about that, because it sort of gives the market a role in pricing the validity and the soundness of the Chinese authorities and the government. So I can understand their wariness, but it's actually difficult to price other debt when you don't have a government bond market. And one of the problems we've had is there've been quite a lot of headlines created in RMB internationalization without full follow-through. So we get a single PBOC T-bill sale in London, and then nothing. So basically what we get is the initial headlines. We're not getting the follow-through. So I don't want to sound like giving the Chinese authorities too hard a time, but I just think in terms of proper full global RMB internationalization, we need more decisive steps from China, I think.
Okay. Ravi, could we pass up the microphone, please? This one just there. Thank you.
I'll speak loud.
Okay.
So, I think it was President Giscard who talked about the US dollar's exorbitant privilege from being an international reserve currency. And with that exorbitant privilege comes also some responsibility to have an open and liquid and transparent financial market. I guess what I'm picking from the panel, and I'd just like you to confirm this, is that you're saying that because China is so powerful and strong economically, that perforce, because of that, there's going to be more international use of the renminbi for trade. It's just inevitable, right? There's more Chinese trade. But what I'm not hearing from you is any great endorsement of the other conditions that are necessary for an international currency, which are open and transparent financial markets, a very liquid sovereign bond market, a willingness to let the markets dictate the prices of things. So where do you think we're on that more complicated road towards the full internationalization of the currency?
I'll start with you, then we'll go to you.
I'll have you start off. Yeah, I mean, this sort of term of reserve currency, international currency is thrown around, and there's no sort of definition. If you look at the dollar is, if you look at the share of foreign exchange transactions globally, the dollar is involved in 88% of global transactions is the dollar. that's a global reserve currency. The euro is involved in 31%. So that's the second big. That's pretty big, and then it tails off.
Where's the RMB?
The RMB at the moment is 4. I think the latest number I saw, roughly on the same level as the Canadian dollar. So it is used globally, but it's a long way down, and nearly all of the use of the renminbi is against the dollar. So it's not being used sort of outside China between two other countries. It's Chinese residents against the dollar, and then they use the dollar to get some other currency. So it's a long way down now. And if I were to sort of take a punt on where it will end up, I think it will end up on the same level as the Swiss franc, the pound, sort of 10% of global trade, rather than 30% like the euro or 80% like the dollar. A lot of the cheerleaders seem, I think, to sort of blur these distinctions and suggest that it's going to be up there with the euro, with the dollar, but I think that's unlikely. As you say, it's got economic size, but there's questions of market access and whether they'll be willing to open up the markets. There's also trust. That's a really important thing. Just before the Belt and Road Forum last week, for example, there was rumours that Chinese authorities were intervening in the stock market so as to stabilise prices around the Belt and Road Forum. That is not the action of financial regulators that want to generate global trust. So I think we've got a very long way to go, and I don't think it's in the DNA really of financial regulators to take those steps.
Actually, I thought your summary was a little bit better than mine, actually, in terms of the overall issues. But I mean, I think the good news really is that the Chinese authorities, PBOC, Yigang, they understand the issue, I think, and it's very striking that what we've really seen is a shift now in policy emphasis in China. They haven't abandoned RMB internationalisation, but I think they're putting less emphasis on the specific institutional reforms around it. And that accelerated phase that we saw ahead of SDR inclusion, I think that's behind us now. And the new focus is moving back to the domestic context and to working on issues around regulation, shadow banking, management of the banks. And I think the Chinese authorities themselves understand that it's more onshore that the work needs to be done. And I genuinely think, a lot of the framework for RMB internationalisation internationally is already in place. We've got the clearing banks everywhere across the globe. We've got the investment quotas, the access to the onshore bond market. So in many ways, the framework internationally is in place. What we need is better management really onshore. And I thought there was an interesting comment by Yigang in a New York conference around RMB internationalisation issues. And he mentioned two preconditions for more internationalisation. Firstly, some levelling off of the capital outflows, perhaps a reversal of those. But the other one was tackling the onshore debt problem, particularly the corporate leverage issue. And I think that was really striking because it really sort of underlines that the domestic regulatory challenges are as important as the international challenges in pushing forward RMB internationalisation.
I also think we need to realize what year we're in and what's happening in October in China, which is the People's Congress. And the stability of the RMB, the political situation, the economy is going to be number one, second to none, up until the end of October. And so I also think that we need to think about timing in our discussions about how it is that changes onshore are going to be made through both the regulatory framework and the political will. I'm picking up a much more positive direction of travel. I think that we're going to see an accelerated, thoughtful, internationally guided opening up over the course of 2018, 2019. The heady speed of change, regulatory pace, I agree, Robert, is behind us. But I think that's a good thing for everyone. Because now we can start thinking about how it is that we can engage with the discussion to make regulatory coherence and international standards a bit more embedded in terms of the onshore market. But in terms of, two points, the CIBM, the interbank bond market opening up in China, we haven't seen a massive rush of international capital celebrating that and sort of going hell for leather into China. But I think that that's also a function of education. It's also a function of interest rates and the valuation of the RMB. So we are in a very different place than we were in the early parts of 2015. So all of these impacts are sort of working together in tandem. And there's a real push for inflows when we talk about RMB internationalization. We've mentioned this a number of times on the panel, as opposed to the outflows, which are being quite constrained at the moment. So panda bonds are what they want to talk about, right? So corporate panda bonds, building out the onshore market, trying to make sure that that yield curve is complete. So as with many things China, it's important for us as international players to understand what those drivers are and what those priorities are within China. The second point to make is about trade. And again, it's very much influenced by the perception of the RMB. If you are trading in some sort of commodity product or indeed services, are you going to accept and hold the RMB right now as a company that is doing its own business, never mind without the financial transactions? Frankly, probably not. So the RMB has slipped from 5th to 6th. It was on an ascendancy. It's now slipped back. So all of these things, I think, are in a little bit of a holding pattern. But the biggest holding pattern is caused by that October party conference, making sure stability is absolutely number one.
Okay, please. There's a microphone just there, please. Thank you.
Thank you. Thank you. I think that internationalization is a very abstract concept. That underneath that big internationalization, the word actually involves a lot of other issues: foreign exchange trade, interest rate, commodities, pricing. Now, my question is, internationalization is talked a lot outside China, whereas inside China, I doubted many people on the, let's say, grassroots, not really grassroots, I mean, on the business level, people, do they really know what is internationalization? I mean, for example, Robert, I read, you're probably one of the first writers who wrote about RMB internationalization. If we follow the conventional route of dollar, yen, pound of internationalization, it's all connected with the rising power of the country. There is some argument today that let's take the commodities as an example, that China has reached its peak in commodities, importing, exporting. Well, Belt Road is another issue. Maybe there's a second rise, second wave, third wave, fourth wave. We don't know about that yet. It's very long-winded. Pricing is important in the currency's acceptance. My question to Robert is, there is an argument that China has missed the boat on doing the commodity pricing, because when they import a huge amount of iron ore into China, that is the moment that they can catch to really implement Chinese currency. Do you think that that is the case, that China has missed the boat on that front?
Thank you for the question and the references to the book. The first thing to note, I think you're right, that first mover advantage is very important, and from that perspective, that gives the dollar a very strong role, obviously in the global financial system and in commodity pricing. But however, I mean, history tells us that we do see transitions between major reserve currencies. So sterling, for example, gave way to the US dollar with the dollar's rise, particularly after the Second World War. So we do see those transitions. And I would argue that given the technological developments and advances that we've seen, actually the technology is quite an important facilitator for transition between using different currencies. So it's actually easier to make that step. However, I think it's also important to note that there's a political imperative underneath RMB internationalization, which I think is something which, although the authorities in China don't articulate very much as much these days, I think it is extremely important. And the reason for that is that ultimately the dollar and to some extent the euro dominate the global payment system. So ultimately, international transactions are cleared back with the New York Fed and to some extent the ECB. Now, that politically and geopolitically, that's not neutral. So when we think about, actually, it's sort of the dollar's the major currency, it's sort of basically, it's got that role, first mover advantage, the status quo is fine. Well, that may be the case, but ultimately it gives the US enormous power, the US administration enormous power over the global payment system. You talked about the US's exorbitant privilege. At the moment, that's more to do with, I think, more to do with the payment system, sanctions, issues around that. And I think ultimately, given the rebalancing of the global economy and the geopolitical environment, it's natural that China will want to see part of the global payment system embedded in China itself and in CNY, and not in Washington and in the US dollar. So I think that that political imperative is extremely important, and is part of the dynamic alongside some of the economic issues that we've already discussed.
I think if I can pick up on several points, I mean, you talk about the volumes of people in the emerging markets. You mentioned Mongolia. You just look at the Philippines, Indonesia. The volumes of people I don't think we appreciate in the West. If you look at I've talked about millennials, I think something like 78% of them are in the emerging markets. Now, by 2020, they're going to make up half the population. If you look at Arab Spring, that was a social media organized revolution. If you look at America today, and this is a very personal opinion, I wonder if we'll look back in time and think the Americans have voted for the end of their empire. I think that, and look, a lot of that could be about fake news, but who knows? I think what we're seeing, though, is where countries lack physical infrastructure, so lots of people don't have phone lines in Africa, lots of people don't have phone lines in Asia, and why do you need them? You have a mobile. And what's interesting is that peer-to-peer foreign exchange, I can travel to the States, I can get an interbank rate for a $5 on whatever volume I want to do for domestic and pleasure use. But I think what we're going to see is we're going to see the power in the hands of the people. And you talked about people, and I think we ignore them at our peril. And certainly in the West, we really ignore them at our peril, because it doesn't take much for a new entrant to come in, delivering a very sexy, interesting social media application that allows peer-to-peer transaction. That peer-to-peer transaction doesn't need to happen onshore. It can happen offshore. Actually, people don't care where it happens, but you do need trust, and you do need a counterpart that you can trust. But who do people trust? Facebook? Google? And actually, the trust in the banking system isn't something that we can take for granted. The trust in the banking system has to be earned by each generation. And each generation of bankers has to gain that trust of, in this case, the millennials. And I don't believe it's happening fast enough. And I think that we talk about what's going to happen. Has China missed the boat? Absolutely not. Why? Because the volume of people there and the lack of people in Europe and the aging population we've got here, I think that is going to be a much bigger play. And I think the time is still there and it's time still happening. The only question I've got is can Europe and America catch up and be on that boat, or are we going to miss the boat?
So, in your view, social shifts are not taken into account nearly as seriously enough. We talked about political change, we talk about geopolitics, we talk about technology, but also, you know, the shift, the demographic shift, the demographic changes in Asia needs to be built into any calculations when you're looking at effects.
Yeah, I believe so. And they're very hard to calculate. And,
Yeah.
and the reason being is that, you know, we don't speak to the people enough. I mean, I don't understand what my kids do on their mobile phones enough. I mean, I don't understand, and they're 10 and 12. You know, they've got a different way of interacting than we have. And I think often, you know, myself and my wife believe that they're going to behave in the way that we behaved when we were children. But the world is a different place, and I think that we're only just starting to see that. And I think that with smartphones, and hey, look, I've got a smartwatch, right? I don't even need the phone. I think that what's happening in the pace of change now is going to drive tremendous amount of opportunities for those who want to take advantage of them.
Next question, please. So, again, would you mind just passing down the microphone? Oh, well, yep, thank you.
Hello. Just wondering, what's your view about, you know, in a context where you know, President Trump has been talking a lot about trade being not fair and tearing up trade deals, and on the other hand, China is very readily offering their capital, their money, and all this. A very good example is in the Southeast Asia region. America has been allies for many years, but the current view or situations that you're not sure whether they're going to be there. Whereas, you know, the Chinese came in very, very quickly with their capital and trade deals and all these things. And just recently, there's this digital free trade zone set up in Malaysia. So that's another piece of the equation, which is technology, right? Like you said, you know, I could be buying things from Taobao using renminbi from Malaysia, because it's not that difficult nowadays. In the context of technology and political climates globally, and the destabilization of Eurozone and all this, do you think it will accelerate or change the dynamic of renminbi versus dollar or euro?
Yeah, I mean, we are in quite extraordinary times and quite unpredictable times. But let's go to you know, Trump, Brexit, rise in national, all that. How's that going to impact, or will it impact on the RMB and the political path to internationalization?
Brexit. We knew we were going to get there at some point. But actually, you know, it's a great opportunity to think about that for just a minute, which is, again, you know, I have the privilege and luxury of being back and forth from Asia very frequently. And Asia for me is very much greater China, India, Singapore, Japan, and sort of moving through the ASEAN countries as well. And one thing that's really important that I've learned is that London talks about Brexit, and Asia talks about business. So I think that what we need to think about is we need to think about how it is that we're creating trading links, and you know, what is going to be good business for Asia and for the UK. And so, you know, what it's denominated in almost comes second. And all of the factors that we were talking about previously kind of come into play as to how that, you know, makes some sense going forward. I think that there's quite a bit of uncertainty. I think that Asia is looking at a trading bloc that's going to be able to shore up an Asia-focused power that works through there. Belt and Road plays a role in that. Of course, it's not just across from Beijing through to what we'd like to think of as London as being the Western centre for that route, but it does go through the maritime, and it goes, you know, right now the roads, the railroads, the infrastructure is being developed across the border from Yunnan to Myanmar, across the border from Yunnan to Laos. You know, Cambodia is already you know, built with Chinese money. So I think that we have a lot to learn about how those trading links are happening and how it is that that's starting to affect us here in London.
I mean, the Trump effect is huge, it's unpredictable, it's hard to know what's going on, but we have an extraordinary situation where the president of China gets up at Davos and says, I'm the champion of free trade and globalization. Bring that down to the real impact on currencies and nationalization and trade. Mark?
I completely agree with what Sherry just said, that I think that the trade stuff is incredibly important. I don't think it matters so much what the denomination of the trade is. I think those things sort of work on different planes. And I suspect that in the future, when we look back, the most consequential development, perhaps for the global economy over the past few months, will turn out to be Trump pulling out of the Trans-Pacific Partnership. This maybe is the point where the US is no longer trying to be the leader in Asia, and China is right there wanting to step up with its RCEP trade deal that they're now pushing forward. Whether or not that trade is denominated in RMB or dollars, I don't think is as big a deal as the fact that the US has so far sort of stepped back from trying to be the power that sets the rules for the way that this integration happens.
I don't want to bring unanimity to the panel, but I tend to agree with the comments that have already been made. And I think this is really what's happening in the US and with Trump just underlines that Asia as a region needs to build its own house in terms of trade, economics, but also in terms of financial markets and currencies. And I think it just simply reinforces the arguments for RMB internationalization from a geopolitical point of view. So I really hope that China and the rest of Asia takes this opportunity.
And are you picking that up, just picking that up in Asia, that there's a Trump impact in terms of an opportunity in the FX markets and beyond?
Well, I think every time I look at Trump on the TV, I wonder how people trust him. We've talked about trust a lot. I think trust is needed for trade. And I think one of the pillars I've always thought of London and trade in London is a strong legal framework and the ability to have your contract honoured here. I wonder if Trump isn't undermining trust in the States. I mean, you see the Axis change, his relationship with Russia change, which puts 60 years of Cold War feeling between Europe on its head. I think that lots of people would love to move into new and emerging markets, but I think again there's the issue of trust. It's the thing of saying, if I send my execs over there, will I get them back? If I send them over there and they say the wrong thing, will they disappear? And I think that can't really be underestimated, because at the end of the day, we're talking about people, and people trade based on trust, and they don't trade when they don't trust. And I think Trump and what we see with him is opening up more opportunity in Asia, because it takes that way of trust. And I think, coming back to Brexit, I think what a lot of investors in England feel is betrayed, their trust betrayed. They came here so they have access to the European market. We've pulled out, so has that trust been betrayed? And again, it's all about trade, but it's all, again, about trust, I think.
Just a quick comment, though, if we're going to talk about Trump, one of the things we should all be watching is the 100-day announcement, which comes on July the 16th between China and the US. So they've made a number of commitments in their economic dialogue. And the two things to watch, in my opinion, is what the content of that starts being ratified. And the second is how it's announced. Because obviously in China, there are some subtleties there about how important it is. And that actually resonates in the US as well. So I'm keeping an eye on that in terms of a near term. How is that sort of being politically pushed out? I think it's going to be quite interesting for us to get more answers to that same question.
Tremendous. Well, on that note, I'm afraid we are out of time. A great way to finish this. Obviously, a huge sweep of material that we can cover here. And we will revisit this over the next 6 months at Asia House. But please join me in thanking our speakers, Andy Mather, Robert Minikin, Sharon Gera. Thank you all very much for being here.